Hey everybody, it's Brian, the home loan and real estate guy. I wanted to take a moment to provide you with a mortgage rate and housing market update now that we know who the administration is going to be. So you can plan accordingly if you're looking to buy, sell, or refinance. So let's just get kind of deep down into it, and I'm going to tell you everything that I know, all the information that we're being told from our market investors, our analysts, the lenders that we do business with. We've obtained a lot of information over the last 6 or 7 days, and I just wanted to do this video and just share with you what we know as of today, where the market is going to be trending between this period of time from right now to January 20th, and then what we foresee is going to happen once the new administration actually takes office moving forward. So I'm going to kind of break this down in some different stages. And again, this information is for those who are looking to buy, those who are looking to sell, people who want to refinance, people who want to get equity lines of credit. I'm doing this video for you so you can make the best decision possible for you and your family. And so we're just going to jump right into it. So here goes. What we've seen since the election is the stock market. Let's just start with that. The stock market has soared to new heights. And this is all just based on the perception of what the Trump administration is going to do. We saw what he did when he was president before, and it's perceived that it's going to be the exact same or even better. So once we found out that he was going to become our next president, there was going to be a change in administration, we saw a lot of money get pushed into the stock market, and that's what's caused the stock market to soar. A lot of investors see Trump as an economy booster, right? He's good for business. He's good for jobs. So just on the announcement alone that he was going to be coming back to office and there was going to be an administration change, we saw an influx of money get pulled from the bond market, put into the stock market, and the stock market is soaring. So that is great. If you are an investor, you're investing in the stock market, I'm sure you've been watching that and you've seen your portfolio grow. What has also been on the rise is mortgage rates. That's right. Mortgage rates have actually been going up since the election results were announced. They have not gone down. But this is temporary. And this is something that I wanted to explain because, to be honest, I've been on the phone nonstop. People have been calling me since the election, since last week's Fed meeting, which, by the way, if you missed that, the Fed did cut the Fed fund rate by 25 basis points, so basically 0.25% went down. And everybody's calling, they're asking, they're like, all right, I'm ready to buy. You know, the economy is going to be getting great. Boo, boo, boo. Interest rates are lower. What's going on with rates? And I've had to tell them that mortgage rates are actually not going down. Mortgage rates are going up. And people are scratching their head and they're going, well, why? I thought mortgage rates would go down. Why are mortgage rates trending higher? So that's why I'm doing this video, because I need to explain this. I need to get this out to everybody. So please share this video. Please like it. Please forward this to all the groups so everybody is aware of what's going on and what is going to happen. So, okay, I'm going to get to it. I've talked enough. I'm going to break this down. So as I already mentioned, the Trump administration is perceived to be an economy booster based on what took place when he was president before. So again, it's perceived that he's going to come in and he's even going to do more for the economy, right? Because he can't get elected again. So it is gangbusters, right? So what is going to happen is during this time between right now and January 20th, Trump is basically out there telling everybody what he is going to do, okay? And the markets they're kind of split. And one way, they're loving it towards the economy, towards new jobs, bringing jobs back home, okay? They love all this. And that's why we're seeing the stock market soar. We're seeing a lot of money get put into stocks because, again, it's perceived that he is just an economy booster and America is about to boom, okay? And this is really great for stocks and investments. But when it comes to mortgage rates are temporarily being affected by this. And it all has to do with the movement of money from the bond market into stocks and then from stocks into bonds. So right now we're seeing a lot of investors, it's easy money in the streets, okay? It's very easy to make money. Crypto's on fire, stock market's on fire. Right now, it's very easy money. If you had a bunch of money and you threw it in the stock market, it's guaranteed that you're going to make some kind of money. And that's what is happening with mortgage rates. Investors are pulling money out of the bond market, okay? Mortgage rates are part of the bond market, mortgage-backed securities. So we're seeing a lot of investors pull that money out of low-yield, safe haven bonds, and they're putting it into high-yield, fast-earning stocks. Again, based on the perception of what Trump is going to do, okay? So as a result of money coming out of low-yield, safe haven bonds and going into stocks, that's pushing mortgage rates higher because we're not seeing that money go into the bond market. When you have money coming out of stocks and going into bonds, that's what suppresses interest rates, it pushes them down. But vice versa, when the stock market's taken off and investors are like, oh my God, the stocks are going like crazy, they're taking all their money from those low yield safe haven investments and they're putting it in the stocks. And again, that's what pushes mortgage rates up. So between right now and January 20th, expect mortgage rates to stay around these current levels. We're really not going to see them go lower or really go too much higher. They're going to be around this range that they're at right now. This range, by the way, let's just talk about this. And I'm only going to touch base on the most common loans, FHA, VA, and conventional. And I'll talk about jumbo too. So FHA, VA loans, those are government insured loans. They're going to be bouncing around between 5.5% and 5.75%. Expect that rate. Again, FHA and VA, expect to see them bouncing around between 5.5% and 5.75% between now and January 20th. Which, by the way, I do want to say, January 20th, you know whose birthday that is? That's my birthday. So I have a lot to celebrate about this birthday. Woo-hoo-hoo-hoo. Anyways, let's not get scrolled about that. So mortgage rates are going to stay between this range until the election. Okay, so they're going to be a little bit elevated. Conventional rates, they're hovering between 6.25% and 6.5%. And jumbo rates are between 6.5% and 6.75%. So again, expect to see these rates. Government, mid to high fives, conventional, low to mid sixes, and jumbo, high sixes, mid to high sixes on jumbo. And again, that's where we're going to see interest rates between now and January 20th. Now, once January 20th comes and Trump is actually in office, if he puts pen to paper and he does what he says he's going to do, that's going to start to change the market too. So let's stay on topic of interest rates first. I'll talk about buying and selling in just a moment, but I just want to stay on topic of mortgage rates. So again, between now and January 20th, rates are just going to kind of stay around current levels. Come January 20th, this is what the expectation is, okay? The expectation is Trump is going to come in and he's going to start signing all these policies, putting all these policies into play. And one of the big ones that everybody's talking about, I mean, there's a bunch of them, but one of the big ones, and again, I'm only going to talk about things that are going to directly affect mortgage rates and the housing market, okay? There's a lot of other stuff with the economy, with immigration, where I don't care about any of that. My job is to focus on home loans and real estate and provide quality advice to you so you can make the best decision possible for you. So I'm only going to talk about things that pertain to mortgage rates, and that's it, okay? So Trump comes in like he said he's going to do, and on my birthday, January 20th, if he signs and he puts into law these tariffs, what's going to happen is we're going to see inflation spike, okay? And that's, for some, again, I don't know, how do I want to say this? I don't want to get political, so we're not going to talk about that. If he does this thing with tariffs, it's going to create inflationary pressure on the cost of imported goods, right? Food, clothing, toiletries, cars, all these things that we import, he wants to put tariffs on, okay? That's going to increase these prices, okay? And what is that going to do? What is the Fed going to do when we have this pricing pressure? Because there's another component that Trump is going to have to deal with that the current administration is already dealing with, the Fed is kind of dealing with, but Trump is actually, and a lot of people don't know this, he's being dealt this one hand, this unemployment rate hand that is not so good. So when Trump takes office, he's going to have to really work on the unemployment rate, and he's going to have to work on inflation. And this is what the Fed has been working on this whole time. But Trump's going to come in and he's going to kind of disrupt it a little bit. So the Fed and the Trump administration, even though they butt heads a lot and they don't really like one another, they're going to be forced to work with each other and come up with some kind of compromise to help the economy and help the American people, because this is what's going to happen. Right now, currently, the unemployment rate is rising, okay? It's anywhere, depending on where you look, what data you read, if it's the feds who are reporting 4.1 to 4.2 inflation, or if you're looking at the private sector who is showing a more realistic unemployment level around 7%. Doesn't matter which one you look, unemployment is rising. So it really wouldn't matter if it was this administration or that administration. Whatever administration it is, they're going to have to deal with the unemployment. And since it's a Trump administration, we know that. We know some of the policies that he's going to put into place to help bring that unemployment down. But the policies that he puts into place to deal with unemployment is not an immediate reaction. We're not going to see immediate results. The policies that he's going to be putting in place are more for the long run. It's to get the country back. It's to get jobs back, get manufacturers back. This stuff does not happen overnight. It takes time. So in the beginning, we're going to feel a little bit of a pinch. There's going to be a little bit of sting. He's going to be doing everything that he can to hurry up and, get people back to, work and bring cost of fuel down, bring cost of food down. But it's not immediate. And this is something that a lot of people need to understand, that there's not going to be an immediate change. Okay? It's going to take a little bit of time for his policies to work themselves into the system. So what do you do during that portion between now, while we have this one administration, then he comes in and he's, putting pen to paper and he's putting all these new policies into play. What about that lag time, right? Because there's always a lag time for change. So again, regarding interest rates, if he slaps these tariffs, and we're not going to talk about what percentage, whether it's 5, 10, 15, 20, 100, 200%, doesn't matter. If he puts any tariffs on imports, it's going to put pricing pressure. We're going to see inflation. So if you have, now I'm going to, everybody knows that I talk with my hands. So if you have unemployment that is going up right now, again, doesn't matter, the administration, it is going up, okay? And then you are going to slap all these tariffs on imported goods. Now you have inflation. So now you have not only unemployment going up, but you also have inflation going up. Well, what are you going to do? You can't have both going up at the same time. That's not going to work. And that's why I said the Trump administration and the Federal Reserve, they're going to have to come together and they're going to have to be buddy-buddy for a little bit, because they're going to need to work together to help bring down that pricing pressure. I've been studying this for a week, staying up super late at night, getting up early in the morning, reading tons about this. And I got to tell you, this period of time, this transition period of time, it is going to be it's going to be wonky in the market when it comes to mortgage rates. Again, we're going to talk about house values, buying, selling down the road, but talking about mortgage rates between now and January 20th, they're just going to be kind of around these elevated levels. And then if he does these tariffs, expect the Fed to jump in right away and cut rates even more. And here is why. When you have high unemployment, unemployment's rising right now, okay? Everybody knows this. So when you have unemployment rising, let me ask you a question. When people are unemployed, they're not taking vacations, they're not buying cars, they're not buying boats, they're not buying all of the extra stuff. They're barely getting by. They're buying just the necessities. And then you're going to put tariffs on those necessities, right? And that's going to shoot prices up. So the spending power of the consumer is going to have to get pulled back a little bit, okay? Because they have high unemployment, and then you have inflation that's also going up. So what's the quickest and easiest way to spur the economy, to spur growth, to spur consumer spending. The fastest, easiest, I'm talking immediate, the most immediate way to do that. It's by lowering interest rates, okay? The Fed is going to be forced to lower the Fed fund rate at a more aggressive rate than what they're portraying, because they're going to have to deal with this rise in inflation. Now, people are going to get confused by this because they're going to go, hey, Brian, you know, when inflation typically goes up, doesn't the Fed, you know, raise the Fed fund rate to deal with it? Yes, that is true. But we're talking about a different kind of inflation, okay? There's two different kinds of inflation out there. You have the one that we saw for COVID, okay? When the government was giving stimulus money, interest rates were 0%, everybody was out buying houses and cars and boats, and you couldn't find anything. Prices of goods had shot up because there was no inventory, right? You didn't have the inventory for cars. You didn't have the inventory for houses. You didn't have the inventory for the clothing because everything was shut down. So you didn't have that. So that's why inflation shot up, okay? It's because you had all this stimulus money getting pumped into the system. People didn't have to make their mortgage payment. They didn't have to make their car payments. That was all on deferral. The government was giving them money, okay? So it was spending like crazy. So the Fed had to step in and go, whoa, 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 we gotta rein this in. We gotta rein this in. Inflation's, you know, going through the roof. We gotta slow back consumer spending, jack up the Fed fund rate, put a lid on it, right? Make the cost of borrowing so high that people can't spend. Bring that down. Let the economy replenish, the goods replenish, okay? That's the kind of inflation that we were dealing with then. The kind of inflation that we're gonna be dealing with now, due to these tariffs, it's a different kind of inflation. This is inflation on goods that people need, not want, but need. Okay, they need food, they need clothes, they need toiletries. All these things, all these products are coming in from overseas. And now they're going to be slapped an additional tariff, an additional tax. That's going to increase the cost for consumers. And when you have an unemployment that's going up, and then you have costs, right, of these goods going up, something has to give, right? You can't have both going up at the same time. So something has to give, and that's where the government's going to have to step in. They're going to have to bring down that Fed fund rate, bring down the cost to borrow money, to spend money, to help spur growth. And this is what the Trump administration wants to do too, right? They want to make America great again. They want to bring the jobs back from overseas here. They want to open up pipelines, fracking, do all this stuff. They want to create jobs here in our country. But again, that takes time. It's not going to happen overnight, right? Millions and millions of jobs are just not going to happen. It's going to take policies and procedures, and companies are going to have to move back and open up and hire. That all takes time. So long run, all of his policies, everything is going to be great. But during that transition period, during his initial setup, there's going to be a little bit of sting. Mortgage rates are going to be at an elevated level. Prices of goods are going to be up. All right, it's going to be a little bit of a shaky time. So what do you do? If you're looking to buy, if you're looking to sell, if you're looking to refinance, consolidate debt, what do you do during this time? That's what this video is about. I ramble on because I have a lot of information. Like I said, I've been studying this, I've been getting up early in the morning, staying up late at night, just reading all this, trying to digest this so I can provide you with quality info. So here's where it's at. Again, let's stay on mortgage rates. We haven't even gotten to the housing yet, buying and selling. I'm just talking about mortgage rates. If you purchased, okay, and your rate is 7% or higher, refinancing now totally makes sense because conventional rates are between 6 and 6.5%, okay? So if you have a conventional rate and your rate is 7% or higher, definitely give me a call. We'll refinance you because it would make sense. If you have a 6.5% rate, hold. You can't do anything because rates are not trickling down yet. They're going to stay around these levels, okay? If you're looking to get an equity line of credit, let's say you have a bunch of credit cards and you're paying 25% on your credit cards. You got a 15% auto loan, a 20% personal loan. Call me Because the Fed just lowered the Fed fund rate. The Fed fund rate, by the way, I'm going to scroll into this one. The Fed fund rate applies to home equity lines of credit, personal loans, auto loans, some student loans if they're private, okay, and credit cards. Those are kind of like the 5 main ones, okay? But not mortgage rates. Mortgage rates are tied to the bond market. So when you hear the Fed say, oh, we just lowered the Fed fund rate by 0.25%, mortgage rates didn't go down by 0.25%, okay? Home equity lines of credit went down by 0.25%. Credit card rates, personal loans, student loans, auto loans, those rates went down, but not mortgage rates. Mortgage rates are rising, again, because it's perceived that a Trump administration is an economy booster. So right now, everybody's pulling their money from bonds and putting it in stock so they can make a buttload of money. And that's pushing rates up. And again, we're in that weird transition period, okay? But January 20th, on my birthday, Trump's going to come in. If he does these tariffs, we're going to see a spike in prices. That's going to raise alarm bells. People are going to be pissed. The Fed's going to have to step in and go, hey, we can't do this, right? Like we have to, kind of like fix this. And they're going to have to be forced to bring the cost of borrowing down to spur consumer spending, right? Because when consumers are spending, there needs to be people at those jobs that they're buying from to, service the orders or whatever, okay? Consumer spending equals jobs. That's the basics of it. So if we can keep consumer spending, right, the cost of borrowing money low, then that will help with the unemployment rate. So there's a lot of talks out there. I've been reading this and reading that, and, the Fed, is not going to listen to Trump, and, Trump can't fire me, and Trump's all bashing on the Fed. Oh, we're going to replace you. Yeah, Trump can't replace the Fed. The Fed hates Trump. But to be honest, the two are going to have to work together to solve this problem that we're kind of in, and that's going to be created based on these tariffs that are coming. And again, this is a short term. This is a short-term thing. This doesn't mean that the economy is going to suck and mortgage rates are going to be, at these elevated levels for 3 or 4 years. No, this is a short-term during the transition, because you have to remember, even though he's president-elect, he is not president yet. So at this point, it's all just a bunch of talk, a bunch of tweets about what he's going to do, and the market is reacting to that. Where we're going to see the big change is from day one. And again, if he does these tariffs, we're going to see immediate pricing pressure. Prices are going to go up. It's going to spook the markets. The Fed's not going to like that because they're already dealing with rising unemployment. They're going to be forced to step in, lower the Fed fund rate to keep spending going. So for mortgage rates, equity lines of credit, get them down now. No need to wait. If you're looking to refinance, if you're above 6.5% on conventional, call me, like 7 or higher, give me a call. If you're an FHA or VA and you're at 6% or higher, give me a call. Call me either way. I'll let you know if you need to hold or if it's something that we can do now. But again, this is where we're going to be with those mortgage rates. And by the way, I was just reviewing this morning because I've been getting asked this. Where were mortgage rates when Trump was in office? I don't care what anybody says. Mortgage rates were only 2 and 3% at the end of the administration due to COVID, okay? For 90% of Trump's administration, while he was in office, mortgage rates were between 4, like low 4s, and low 5%. There was a period that they were in the high 3s. There was a period that they were in the low 5%. But for most of his presidency, mortgage rates were in the 4% range. We'll just call it 4.5 because you have a FHA, VA, conventional, and the rates vary between those programs. And this is where he would like to see rates go, right? He would love to see interest rates around mortgage rates. Okay, mortgage rates and interest rates are a little bit different. He would love to see mortgage rates between 4 and 5% because that's a healthy rate. That gets people out buying. It gets people to refinance. It pushes money into the economy. And so that's what he's going to be working with the Fed, trying to figure out what they can do to help get rates lower to deal with what's going to come and some of the policies that he wants to put in place. So long-winded, I know, and I apologize, but that's what we're dealing with mortgage rates. So if you have any questions about mortgage rates, you want me to run a scenario, just let me know. Now, let's talk about buying and selling, okay? So we're going to start with buying. For those who are looking to buy, I got to tell you right now is the time to buy. So whether it's new construction or resale, you have a window of opportunity. And I've been saying this for a while. You have a very limited window of opportunity between now and I'm going to say before next summer. So we're going to just say May or June of next year. That's your window of opportunity to buy, where you're going to get the best deal, deal in terms of price and maybe incentives from a seller or from a builder, okay? And the reason is because, especially right now, it's the slow season, okay? Typically people don't move during the holiday season or this time of year unless they have to, right? If you're gonna buy, this is the time to do it, because once these policies go into play, once the Fed gets a little bit more aggressive with cutting rates, the market is really going to kick into gear. And again, this doesn't happen overnight. It takes time for certain policies to work their way into the system. But once he gets in office and he starts signing this and signing that and putting this in play, putting that in play, things are going to be moving fairly quickly, and the market is going to rebound and really start to take off. Nothing crazy, okay? I don't think it's going to be anything super crazy, but we're definitely going to see a reversal from what we've seen over the last 6 months. So it's all about getting the property at the lowest price. And then what are you going to want to do? Even though interest rates are at an elevated level, they will be coming down, okay? They will be coming down. So you're just going to ride that refinance wave. The one thing you don't want to do is wait for rates to come down and then buy when the house is at an elevated level. You want to get the house as cheap as possible, get as many incentives as you can, get the seller or the builder to give you as much money towards the closing costs as possible, keep as much money in your pocket. And then as mortgage rates move lower, as we work our way into the new system, as the administration and the Fed works together, right, and interest rates come down, then you refinance. Right? And you ride that refi wave down, you lower the rate and lower the payment. So again, if you're looking to buy between now and I'm going to say May or June is optimal. That's when you're going to get the most incentives and the best price for the home. Now, if you're looking to sell, okay? If it were me, I would not sell right now, unless you had to. If you're in a situation where you have to sell, then I would say go ahead and do it. But if you don't and you have the option to wait, I would definitely wait if it were me, right? And this is how I give all the advice that when I do these videos, I'm always giving you advice as what if I'm looking at the screen. So I'm looking at that guy thinking that dude's my brother, right? What would I tell my brother right now if he came to me and he said, Brian, what would I do? And looking at him, and if he goes, Brian, I want to sell, I would say, hold. Don't do anything yet, because the market is still a little tense, right? We're fresh off this election, all this drama. You know, you got investors throwing all this money into the stock market. Mortgage rates are on the rise. Some people are still a little uncertain of what is actually going to happen when he comes into office. So there is just a lot of tenseness in the air, a lot of uncertainty still. And the amount of people who are looking to buy, it's still out there, but a lot of people, I know this because I do loans and I have a bunch of applications. I got like 50, 60 people approved, but only like 4 or 5 are actively out shopping. And I'm telling them, like, hurry up and go. But you know, they're uncertain. They're worried, right? So I can't push anybody. I don't want to force anybody to buy. I can only give them the advice, and then, you know, they choose to do what they want with it. But what I'm saying is there's a lot of people that are looking to buy. So if you're waiting around for rates to you know, all of a sudden drop and go, oh, okay, you know, now they're at 5%. Okay, I'm going to do this. You're going to wait yourself out of a good thing, because again, when this administration takes office, when he puts pen to paper and he starts putting these things into play, things will move. It takes time, but things are going to move kind of rapid. And one of the things that Trump is really focused on, he's focused on a lot of things, but one of the biggest things that he's focused on is unemployment, bringing jobs back home and then opening up all of our resources here and having people, putting people back to work. That's what he's really focused on, okay? So that is a big thing. And when you have all these people that, potentially going to, flood the market, they're going to go back to work, they're going to, have all these good high paying jobs, those people are going to need housing, right? So prices are naturally going to go up over time. Real estate, you've heard it over and over and over. Real estate is the one asset that over time always appreciates. You have moments in time where things happen, where values go down, they'll dip down, but over the long haul, real estate always appreciates. So again, if you're looking to buy, this is the optimal time to buy. If you're looking to sell, you're gonna wanna hold. And the reason being is just because of all that uncertainty out there right now. I would just wait, because we're not gonna really see mortgage rates start to trend lower either until he actually takes office. Going back to the mortgage rate conversation, I said interest rates, mortgage rates, they're gonna stay around these levels until he gets in office. And maybe even the first 30 days, they might even spike up a little bit more if he does do those tariffs, right? But again, the Fed's gonna have to come in and then help bring those rates back down, okay? To make it more affordable so people can go out and buy the necessities and buy the things that they need to buy. So when we see these jobs come back and we see the economy start to come back, prices are gonna go up. So if you're not in a situation where you have to sell now, the smart play to maximize your value would be to wait, okay? I would wait. I would say let's touch base February or March. Let's see where the economy is at. Let's see what policies are being put into play. Let's see how these policies are going to impact home values, okay? But for me, I wouldn't sell right now. I would just kind of hold off. I would wait. But definitely if you're looking to buy, this is the optimal time. And hey, I'm even going to say this because I was talking to my wife about this earlier. We were talking and she goes, it's always a good time to buy. Don't people tell people not to buy, or don't people not to sell? It is true. It's always a great time to buy, right? But I do these videos to try to help people maximize their profits when they're selling, maximize the potential of buying and taking advantage of current market conditions through seller incentives and builders incentives. I'm here to give you advice so you can maximize your efforts, right? I'm not saying don't buy, don't sell, don't refinance. I'm just telling you, if you're, doing this, optimally, it would be best if you did it within this time frame, right? Optimally, it would be best if you did it within this time frame over here. So I'm just giving you advice based off of what I know, what I'm being told, all the information I'm reading, again, from all these different sources. We have bankers and other lending institutions and market analysts. And I mean, it's all this information over the last week. It's like data overload. This video was supposed to be like 5 minutes long, and I think I'm at like 20 minutes already because I just have so much information to get out there. And to be honest, not a lot of people are talking about it because they're scared. Nobody wants to say anything and give misinformation either, right? Because he's not president yet. We still have like 2.5 months of the current administration, and a lot can change. But, again, I have people, they're messaging me on Facebook, they're calling me, they're emailing me, and they're like, what do we do? What do we do? He's in office, the administration's, this now, so what do we do? And for me, I'm just trying to get out there and give the information so people can, again, utilize this information to make the best decision possible for them. And with that being said, if you or anybody that you know has questions, want to talk in more detail about this, you need me to run scenarios, please feel free to give me a call. I'm not that kind of guy who's trying to sell you on something. I never push my clients. I'm not trying to get people to do this. I was talking to a lady today. We were talking about refinancing, and she was like, the numbers look good. And I was like, you just don't seem happy. And she was like, I wish they were a little bit better. I'm like, do you need to do this now? And she's like, no. And I said, then don't. I mean, I'm not going to get paid, but it's not about me getting paid right away. It's about giving good advice to my customers, right? I'll get paid later on. And that's what I told her. I was like, I'm just telling you, if you're not in a situation where you don't need to do this, interest rates are elevated. They're going to be coming back down a little bit. So if you can wait, then wait, all right? Another lady I was talking to, different scenario. She has an equity line of credit, or she wants to get an equity line of credit to consolidate her credit cards. So I asked her, I'm like, hey, equity line of credit, based on your scenario, 9.25% rate. You're paying 24% on your credit cards. I was like, so it makes sense to do it right now. And then in 6 months, when interest rates are lower, we'll refinance your equity line. I was like, so certain situations, right? Do stuff now, do stuff later. But that's why I'm here. I want to give you good advice. I will always tell you everything I know. I'll be super open, super honest, so you can make the best decision possible for you. I've talked so long, I'm stuttering. Have a great day, everybody. If you need me, you know where I'm at. And thank you for watching the video. Take care.